Investor reporting is a critical component of creating a great experience with limited partners in both funds and syndicated deals. Having partnered with over 150 high net worth individuals, our team has gotten a lot of feedback and over the years continued to understand the significance of quality reporting and how it helps shape and strengthen the relationship with our investors. In this episode, we're going to shed light on the importance of effective investor reporting, the exact structure that we use for our reporting, the frequency of our reporting, and lastly, how it all plays such a vital role in being able to maintain that strong relationship between the investors and the company that they have invested with. Welcome to Requity Insights, a channel dedicated to documenting our journey to 100 world-class communities. The goal of investor reporting is simple. It is to help investors understand the health of their investment. Through doing this well, you're able to build trust with investors, which is going to help create more opportunities for both you and for all the investors involved. I've heard a lot of investors that have invested with sponsors who were just great executors but terrible at communicating. And that just isn't enough in today's world. Investors want to see a sponsor who can communicate, and they also don't want to feel left in the dark and have 6 months go by and then receive a big check at the end of it saying all is well, right? They want to be able to see and understand from the time they make that investment, at least a quarterly basis, they want to be hearing from the sponsor and hearing the good, the bad, and the ugly, so they really understand what's going on. And that, I think, helps put them at ease, understanding that the sponsor is actively working on their investment. Because if you're not communicating as a sponsor, do they think that if you're falling short on your communication role, how are you going to be doing your property management role right, or your asset management role? What does that say to investors about your ability to be consistent and put in the work day to day? So let's go ahead and jump into the reporting cadence. We're going to share with you our reporting cadence. Our reporting cadence is an iterative process. We have made some changes, and we still will likely make some additional changes over time to be able to adapt to the wants and the needs as our investors and our team. But here it is today, and I think you're going to find a lot of value in this if you are seeking some kind of structure, or if you're an investor and you want some idea of what to expect from the sponsors that you may be investing alongside. Number one, monthly written reports. Everyone wants at least a quarterly report. That is a non-negotiable in today's day and age, but we have had some investors, especially that are newer investors, that just like that additional touch point coming monthly, just so that as soon as they make their investment, within the next 30 days, they hear something from us to let us know that we're alive, we're working hard, things are going well, they have an idea of what's going on. So monthly updates have been something that we've recently rolled out over the last year, and so far we feel like we've received less emails just checking in intermittently between quarters. Therefore, we believe it has become helpful, just giving everyone that additional peace of mind, feeling like they are up to date with everything in real time. So we're going to cover the structure of our monthly report. The monthly report highlights a lot of our financial metrics, project updates, any key points in a concise and an informative manner. So the format itself starts with an executive summary, which is a recap of the month that elaborates on any important matters. The idea here is that we are focusing on the big picture. The question is, are we on track to our stated objectives or are we not? This can be very simple because in certain properties we have virtually no changes month over month. It's almost identical income, almost identical expenses. Things are going to plan, and this can be as short as 2 sentences. We've had them as long as 2 pages when we have a lot more in motion, especially with our fund investments where we have more moving pieces, and we'll use this space to be able to showcase and share any major initiatives that are taking place. If there's a major CapEx project, expected or unexpected, we'll touch on that. If we have refinances on the horizon, we'll touch on that. If there was any forecasted sale on the horizon, we would touch on that. If we have major unexpected variances that are worth noting up front, we will touch on that. Seasonality changes, demand changes, supply changes, things along those lines. So the executive summary is where we focus on the big picture objective. This should be well enough to where for someone that only wants to look at within 10, 15 seconds, get a general idea on how the project is going, they should really only need to look at the executive summary to get an idea as to where things stand. So first you hit on the executive summary, and then we get into our distributions, right? One of the big questions investors always want to ask is, how much money are we making? And we make this very clear by breaking down distributions that were received or at least earned for that month, distributions that were received that month that usually were from the prior month, the distributions for year to date, and then distributions from inception to date. And this can be both for your cash flow distributions as well as any either partial sale or refi capital event distributions that could take place. Then we'll get into our financial metrics. When it comes to financial metrics, the big emphasis on a monthly basis is having a variance analysis that will showcase our income, our effective gross income, our operating expenses, our net operating income, our debt coverage ratio, and then our cash flow after our debt service. And then we will go ahead and showcase how does our income compare against our budgeted income? How do our expenses compare against our budgeted expenses? And how does our NOI compare against our budgeted NOI? We're going to be looking at this all on a actuals versus budget basis. And we also like to show it on a year over year. For assets that we've owned for over 12 months, we do like to start to look back. And I love, for me, one of the most helpful things is to look back and see how are we doing with our expenses and our income versus how we did last year, to be able to see if we're making meaningful improvements on a year over year basis and be able to spot trends and reflect. Especially can be helpful for our assets that have more seasonality. We can kind of see the swings and see how the swings might differ year over year. So that is the financial metrics, and we just want to emphasize when it comes to the variance analysis, being able to show if things are not going to plan, or even if they are going to plan, but you have a positive variance, you want to really be able to break down why that is, right? Are you just seeing more demand than you initially expected? Are you getting higher rents than you initially expected? Or is your income hitting target, but your expenses are higher than expected? Is it because payroll's going up? Or did you get hit with an unexpected insurance increase? Or is it just running higher marketing budget, right? These are important things to know because some of these can be temporary situations and some of them are long-term situations. So I think being able to explain whether or not this is a temporary phenomena and we expect that this is just going to be a higher expense load for the next few months, or there's a water leak going on and we think we're going to be able to take care of it and have things revert back to normal. That's very different than saying, oh, we had insurance rates went up across the state and they're not expected to ever go down, because that means that there's sort of a permanently higher expense load than anticipated. So that's your variance analysis. After that, we get into your occupancy. Occupancy, we usually just have a graph. We like to show visuals, and we'll show both the physical occupancy as well as the economic occupancy. Physical occupancy is out of the number of units on the property, how many of those are occupied physically. Economic occupancy is more focused around out of the money that can be earned based on the current occupancy, how much of that is being collected. Then we get into our capital expenditures. We break down the funds that are being used for various CapEx projects. We always have a big CapEx budget and a CapEx reserve that we raise on the front end with any of our projects, and we set aside that to dedicate towards certain capital expenditure projects, and we also will refill the reserve account over time. So when it comes to our CapEx summaries, we're going to touch on which projects that CapEx fund is being spent on and disclose what are the upcoming projects and how much money is still available in the CapEx cash account at this time. Through all of this, we definitely recommend it's always helpful for investors to see different graphs or visuals of each of these, just to be able to better spot the trends and see the big picture of how things are performing. But that is the monthly update in a nutshell, and I think that format should provide a lot of value for your investors. Realize every asset class is different, but the overall objective here is to cut through a lot of the noise and boil down the most helpful information as it pertains to your deal to be able to show the investors the overall health of their investment on a regular basis. In addition to our written reports, we also do periodic video updates. And the video updates are there to give investors more context and more of a feel of what's going on and the story behind the numbers is probably the best way I can say it. So with the regular updates, they're seeing the numbers, they're seeing the growth, they're seeing how we're doing versus where we started from or where we were last year, they're seeing how we're doing versus our budget. But then getting into the video updates, this is your chance to really show photos of the CapEx projects getting completed, the events taking place on the property, the team that's working on the property. You can show reviews and highlight guest experiences or tenant experiences. You can showcase any upcoming developments that are coming to the area. If there's things getting built around your property, it's a great chance for you to be able to showcase that to the investors. So you can show them area developments, stuff that's taking place on the property, and all of the stuff that you really just don't usually have room to be able to hit on your regular monthly updates. And this goes a very, very long way because if it's done right, it can be nearly as impactful as an investor physically getting out to a property and driving around the area with you, because you're able to bring them through the property, show them what's taking place, give them a feel for all of the work that your team is putting on. It's your chance as a sponsor to get to show off, how hard you guys have been working and, the impact that you're being able to make. And for investors, they're able to see that, they're able to be comforted that this property is getting the adequate attention that it needs, and they're able to see that the changes that will later be reflected through the financials. And again, it's always important to balance the amount of information that you're sharing. You don't want to data vomit with 200 different metrics on every written or video update that you have. You want to really try to best you can boil down the 200 metrics into your top 10 metrics or 20 metrics to be able to put them in a digestible format so your investors can get a good sense of the entire story in a way that would be most concise and efficient with their time, because after all, they are passive investors. They don't want to sit here and comb through your rent rolls and have to come up with all of these numbers themselves. They want to be able to see a summary that you've done the work to be able to put together that tells them what's going on and how are we doing. And there you have it. That's our written and video investor update format. Hopefully you can realize that accurate and frequent reporting and communication from sponsors to the investors is crucial for maintaining strong investor relationships. And by adhering to the best reporting practices, for us, it's a goal to be able to provide our investors with the necessary information to make fully informed decisions and continue to build a trusted partnership. If you look at someone like Warren Buffett, who has been doing this for many, many decades, he's widely known for being able to provide his investors with both the good, the bad, the ugly. He's open, he shares his mistakes, and he learns from them. And together, he's grown with his investors. And that's the same objective that we have and that we believe all sponsors should have, is to be able to show their investors. I don't think the right investors should not expect you to be perfect. They know there's going to be mistakes. They know there's going to be setbacks. But in the long run, you should be able to make a meaningful return for them and have a great, long-term outcome. And by sharing what's taking place, both the good, the bad, and the ugly, I think you're able to all grow as a result of it and have much more peace of mind, truly understanding what's going on within your investment. So hope you found that information to be helpful. Thanks for watching. And as always, if you enjoyed the content, please like, share, and subscribe, and we'll see you next time. Thanks for tuning in to another episode of Requity Insights hosted by our team at the Requity Group. You can find recordings of all shows along with our opt-in form to set up a call and view future investment offerings on our company website, therequitygroup.com, also listed in the show notes.